Welcome to the Deep Dive, your shortcut to being well-informed. Today we're digging into Kura Sushi USA's fiscal third quarter 2025 earnings call.
Yeah.
It was quite a quarter. Here's this unique sushi chain, navigating a tough environment. And not just surviving, but really showing some positive momentum. We're going to unpack how they're using tech, smart expansion, even like pop culture stuff,
Right.
to, kind of flip their financial script.
That's a good way to put it. Kura Sushi is definitely dealing with a dynamic situation, but they seem very focused on their strategic initiatives.
Yeah.
And the overall tone of the call, it felt pretty upbeat. You could see the sequential improvements quarter over quarter and definitely a sense of optimism about where they're headed. Okay,
so let's kick off with a snapshot. The key numbers for fiscal Q3 2025.
Lay it out for us.
All right. Total sales hit $74 million. That's up nicely from $63.1 million last year.
Solid growth there.
Yeah, but interestingly, comparable sales growth was actually negative 2.1%.
Oh.
Mostly driven by traffic being down 2.9%, although price and mix helped offset that a bit, adding about 0.8%.
Got it. So traffic's still a bit of a challenge.
Seems like it. But here's what really jumped out at me. The operating loss. Last year, it was $1.2 million. This quarter, only $162,000. Big swing.
Wow. Okay. That's a significant improvement.
And net income actually went positive, $565,000 or 5 cents a share. That's compared to a loss of $558,000 or negative 5 cents a share last year.
So into the black on the bottom line.
Exactly. And adjusted EBITDA looked healthier too, up 20% to $5.4 million from $4.5 million.
The key thing there is those sequential improvements you mentioned. It wasn't just one good month.
Right.
It shows that what they're doing, these different strategies, they're actually starting to gain traction, get some real momentum.
Yeah.
Which suggests maybe they're moving past just trying things out and are now, really executing. That's pretty rare right now in the restaurant world.
Absolutely. Okay, so speaking of execution, let's talk costs. Cost of goods sold improved, but labor costs went up. How much should we worry about that wage inflation?
That's the million-dollar question for a lot of restaurants right now, isn't it?
Yeah.
So looking at their numbers, COGS, cost of goods, did get better by about 90 basis points, landed at 28.3%.
Okay.
And they said that was down to pricing and their supply chain work. But you're right, labor went up to 33.1% of sales.
Oof.
Yeah, mostly because of that high single-digit wage inflation everyone's seeing. They did offset some of it with price increases and, operational tweaks.
Right.
But it definitely squeezed their restaurant level operating profit margin, came in at 18.2%, down from 20% last year. So yeah, it's a pressure point, but they seem aware and actively managing it.
Okay, but despite that pressure, the G&A leverage was pretty impressive. General and administrative costs down to 11.8% of sales from 14%. How they managed that?
Well, they were clear it wasn't just luck, it was a deliberate effort.
Huh?
They basically slowed down hiring and got smarter about allocating work internally rather than just, cutting staff. Management seemed quite proud, actually. They mentioned getting over 300 basis points. That's 3 full percentage points of G&A leverage over the last 3 years.
That's substantial.
It really is. They do expect to keep getting some leverage in fiscal 26, but maybe not quite as dramatic as this year's jump, just because, they made such a big leap already.
Got it. So with that financial picture clearer, let's look ahead. What's management projecting for the rest of fiscal 2025? They updated their guidance.
Yeah, and it tells a story too.
So total sales are now expected around $281 million. That's up from their previous range.
Raising guidance, always a good sign.
And they had their goal of opening 14 new restaurants. Actually, now they expect 15 for the full year.
Wow.
Keeping that annual unit growth above 20%. And on G&A, they now think it'll be below 13% of sales for the year.
See, that updated guidance, especially on sales and unit growth, it really shows their confidence in these strategies we're talking about.
Yeah, that 20% plus growth is aggressive.
It is. It says they really believe the market wants their concept. And the continued G&A discipline, even if it moderates next year, shows it's not just a one-off thing. It's baked into how they operate now.
All right, let's shift gears to maybe the most exciting part. The strategic stuff, new initiatives, unit growth.
Yeah, the fun stuff.
They mentioned finishing the rollout of their system-wide reservation system early, back in May. Apparently, feedback from guests and staff has been really positive. They think it could be a real comp driver, help operations, even though they haven't really pushed advertising it yet, except to rewards members.
And tied into that is the success of their new restaurants, the class of 2025.
Yeah.
A lot of those are apparently doing better than expected. They even called out one in Linwood up in the Pacific Northwest.
Yeah.
Cracked their top 5 performing stores really quickly, which is like almost unheard of for a brand new spot.
Wow.
And that success is feeding into their strategy to look at smaller markets now, DMA's designated market areas, places like Bakersfield, Fishers. They're even negotiating for spots in Wichita and Tulsa.
So moving beyond the big coastal cities.
Exactly. It expands where they can go, and crucially, it helps avoid cannibalizing sales from their existing stores.
Makes sense.
Their goal is pretty ambitious, a 50-50 split between opening in new versus existing markets by fiscal 2027. That's a big shift from the roughly 70% existing, 30% new they expect for fiscal 26.
That is a significant pivot.
Yeah.
Okay, another area they're really leaning into is IP collaborations.
Yeah.
Intellectual property. Feels very Kura Sushi.
Totally. It fits their brand.
They've got like 7 or 8 collaborations planned for fiscal 2026, a record for them.
Yeah, and no gaps expected, unlike the 4 or 5 month hole they had in fiscal 25.
And some big names coming up. Demon Slayer, One Piece, Kirby, which they said is their biggest Nintendo partnership yet.
And this isn't just casual, like, let's do a promo. They've actually created a new marketing role just for IP and an IP committee.
Ah, so they're serious about it.
Very. The idea is to have more at-bats, try different types of campaigns. They even mentioned one, Hollow Live, that didn't have any giveaways, just to experiment. It's all about learning what works best, what really clicks with their customers, and building this like predictable pipeline of events that draw people in.
Okay, speaking of new things drawing people in, the light rice option.
Yes, I thought this was fascinating.
So guests can order nigiri with less rice. Just started rolling out, maybe 10 days before the call, now in 50 restaurants. The hope is people will eat more plates per person.
Well, it's not just hope. This actually comes directly from Kura, Japan.
Oh, really?
Yeah, where they apparently saw it improve both the mix of items people ordered and the average check size. It makes sense, right? Less filling rice means you can try more different kinds of sushi before you get full.
Yeah, actually.
Someone on the call even shared an anecdote about personally eating like twice as many plates because the rice was lighter. So it seems like it could definitely boost consumption.
They also gave a quick mention to a 25th plate initiative, saying it was showing positive early results too. Sounds like lots of little tweaks adding up.
Exactly. And then there's the bigger tech stuff, the dish robot.
Yes, the robot.
Not just a pipe dream anymore. They're hoping to get it live sometime in fiscal 25, or at least certified in the next few months for fiscal 26.
And the potential impact.
Pretty significant, potentially.
I know.
They think it could reduce headcount by a 2-to-1 ratio. So imagine needing 2 fewer people just washing dishes in each location.
Wow, okay. That frees up labor for other things.
Precisely. And they're still tweaking the reservation system, too. Identified over 70 potential improvements, mostly around front-of-house efficiency.
Like what?
Things like simplifying how they seat people. And apparently an unexpected side effect is that it puts a bit of psychological pressure on the bussers, which leads to faster table turns. So it's all about making the whole operation smoother and more profitable.
Okay, let's touch on tariffs. That's always a concern. They mentioned about 45% of their stuff comes from Japan, Korea, Vietnam.
Right. And while they haven't, put an exact dollar figure on the impact from recent Japan tariffs yet, the positive sign is that their suppliers seem willing to kind of share the burden, absorb some of the hit.
That helps.
Yeah. And the good news is their COGS are already in a really good spot, low 28s. They don't expect them to go above 30%, even if tariffs hit hard.
So they have some cushion.
Seems like it. They also said pricing is a last resort, but they feel they will have some ability to take price in November if they absolutely need to. So yeah, it's a factor, but they sound prepared.
Okay, so pulling this all together,
Yeah.
What does this mean for you, the listener, trying to understand this company? Clearly, they're showing strong operational discipline, some strategic thinking.
Yeah, I mean, if you connect all these dots, the reservation system, the IP stuff, the new smaller market strategy, light rice, controlling G&A, the dish robot, it's all pointing towards driving positive comps, leveraging their costs better, and getting those margins back up. They specifically mentioned targeting 20% plus restaurant margins again in fiscal 2026.
So not just growth for growth's sake.
Yeah.
Profitable growth.
Exactly. It feels like a sophisticated approach. They understand the levers they need to pull.
And it shows resilience too, right? Managing wage inflation, potential tariffs. They're using their supply chain, being proactive. That focus on smaller markets, managing cannibalization, that feels like smart long-term thinking for sustainable growth in a crowded space.
Absolutely. And the consistent investment in tech and innovation like the robot and even something simple like light rice, it sets them apart.
Yeah.
It positions Kura Sushi as, an adaptable player. They're finding these unique angles to boost efficiency and make the customer experience better. It's not just sushi on a belt.
All right. Now for our This Is Not Financial Advice segment. Time for an outrageous but plausible trade idea based on everything we've just heard.
Okay, let's brainstorm here. Given everything Kura Sushi is doing with tech, the reservations, the dish robot coming soon, the G&A control, plus the innovative customer stuff like the IP collabs and light rice, here's a thought. What about going long Kura Sushi, KRUS,
Okay.
and shorting a, let's say, more traditional, maybe less differentiated QSR casual dining chain, one that's maybe visibly struggling with labor costs and isn't showing much tech innovation?
Right. So the outrageous part is betting on this smaller specialty concept against the big guys.
Definitely. But the plausible part is that Kura Sushi seems to be actively tackling the biggest challenges in the industry right now, labor, customer experience, smart growth, with these really specific multi-pronged initiatives.
Yeah.
The focus on faster table, turns from reservations, maybe higher checks from light rice, actual labor reduction from automation, that could lead to serious margin expansion and let them outperform peers who don't have that same agility.
So you're almost positioning Kura Sushi as a tech play within the restaurant sector.
Kind of. Yeah, that's a good way to frame it.
Right.
It differentiates them from the more traditional operators. Again, not financial advice, just a thought experiment.
Understood.
Yeah.
Okay. That pretty much wraps up our deep dive into Kura Sushi's fiscal Q3 2025 earnings call. We definitely saw a company showing steady improvement, executing strategically, and laying out a pretty clear path for growth and better margins.
Yeah. The key things for me were the successful rollouts, like the reservation system, the disciplined expansion into new types of markets, and just how cleverly they're weaving together things like IP deals and menu tweaks like light rice.
Right.
And it's all sitting on top of that solid cost management and this drive for operational efficiency. Seems like they have real momentum.
Definitely. And always remember, everything we talked about here, it's for informational purposes only. It's absolutely not financial advice.
But maybe think about this, how these kinds of operational and tech shifts inside just one company, Kura Sushi, might hint at bigger trends across the whole restaurant industry. What could this focus on? Automation, data from reservations, unique customer engagement? What could that mean for how we all dine out? And for restaurant profitability down the road? Something to chew on.
Good final thought. We hope you got some valuable insights today. Join us next time for more actionable intelligence from the world of earnings calls.